What's going on, everyone? Happy Monday. I hope you guys are all enjoying the extended holiday weekend, President's Day today. With that being said, my name is D. Anthony with evolutiontraders.com. But what I want to talk about in this video, and I'm starting to see it a lot on Twitter, a lot on StockTwits, YouTube. You know, what about this chart? And this is the NASDAQ futures, right? So /NQ. But what about this chart is telling us that we should be swinging stocks right now? You know, there's nothing about this chart that is telling me, hey, I want to be long stock going into the long weekend. I want to be holding call options into next week. I want to be holding put options into next week. Now, I'm not saying that the market's not going to continue to gap down tomorrow. Maybe you can sell those put options for a premium. But let's say, you know, as the futures market opens up, we get some kind of headline that crosses the news that, let's say, Russia is not invading the Ukraine. Obviously, it's still too early to tell. But right now that the market is pretty news related driven, any headline is kind of swaying the market up or down. The question that I want to focus on in this video is, why are you swinging stocks right now? Why are we holding stocks? Why are we holding options over the weekend? Why are we buying something, like why are we buying options last week and why are we still holding them into this week? It doesn't make any sense. There's nothing about this chart that is telling me, hey, you know what, we should be getting long here because stocks are too low. Said who? You know, I want to know who's saying stocks are too low right now. I think if you're saying that, you know, I've seen, you know, a lot of comments on social media, you know, stocks are cheap, time to buy right now. Stocks are cheap according to who? According to who? Because, you know, according to 2022, stocks are not cheap. And every time that dip has been bought, we've been putting in a new low. So what it is not is definitely time to be holding stocks and positions overnight. If you are that impatient to where you feel like you're going to miss out on the potential bottom, or you're going to feel like you're missing out on a potential bounce, or if you are so emotional to where you feel like you're going to miss out on the big gap down if we open up red, you have no business trading. You have no business trading stocks actively. Because all you're doing is hoping. This is not a hope business. We're not in the hoping game here. We're in the reacting to data game. We're in the you know, being realistic game. You know, maybe if you're paper trading, or you know, maybe you came into some sort of, you know, $100 million inheritance and you're playing with $1 million of cash that, you know, you really don't care about because you're treating the market like a casino, you know, go for it. But like, if you're serious about this and you're serious about trading and you actually, you know, want to be consistent and you want to learn market structure and you want to learn price action and you want to do this for the long haul, whether that be full-time or not, you need to put the emotions to the side. So many people are driven on, you know, the news headlines. Yes, news headlines in this market are going to sway the market up and down. But there's a lot of people that I've seen on social media this weekend, you know, asking the question, are we going to open up red or are we going to open up green? What does it matter? If you're a trader, what does it matter? I cannot predict whether we're going to open the market red or green. I don't think you can, and I don't think anyone else really knows if the market's going to open red or green. The whole point of this video and what I'm trying to get across is that if you are buying, let's say, for example, you bought, you know, calls last week because you said, you know what, we're oversold, we're at a level of level of support here, maybe we're going to get a bounce. Who said that we need to bounce? Just like if you entered in put options last week on Friday right here and you're expecting some big gap down, yes, we might get that, but who's to say that the futures don't rally overnight and stocks don't open up green tomorrow? So I feel like a lot of people are trying to time the market. So many of you guys want to be in the trade. You guys want to be in the trade. If this is the bottom, you guys want to be in here. You guys want to be in this range because you want to be, you know, able to ride the move up. It doesn't make sense. Guys, the stock market has been around for over 100 years. It's going to be around long after you. It was around long before you. if whether you buy stocks long here or here or here or here, if the market is going to go up, it's going to go up. You're not missing out if you don't catch the move here or here or here or here. It doesn't make any sense. Just like if you're a little bit more sell biased, you don't have to short the market here because you don't want to miss out on this move. Guys, if we're going to put in a 1, 2, 3 legs down, if we're going to put in a third leg down, right? If we're going to put in a third leg down, you don't have to be in here. Why not wait for confirmation here? Because regardless, we're still going to back test, consolidate, and move lower. So you're not missing out. So many new traders feel like you guys are missing out. Where does this FOMO come in, guys? Where does the FOMO, like, what is causing this anxiety? What is causing the anxiety? Are we going to open green? Are we going to open red? This is the bottom. I need to buy stocks here. I know I need to be holding a short position. I need to be holding puts going into next week. Why? Why are we doing this? Because it's those traders who 2, 3 days, 4 days later are talking about, man, I should have sold. Man, I should have not bought puts. I should have not bought calls. You guys are overreacting before the data is coming to fruition. It doesn't make any sense. This is not especially if you're buying calls or you're buying stocks. This is not a time where you buy stocks and you hold stocks. It's not. Who told you that it's time to buy? Who told you that it's the bottom? Now, maybe it is. I don't know that. And I'm not going to sit here and act like I'm some, market expert when it comes to cycles and calling the bottom. I'm a day trader. I'm an options day trader. I'm a scalper. I'm reacting to price action on a day-to-day basis. My bias is going to change day to day, hour to hour. But as far as buying stocks, thinking they're going higher when we're underneath macro supply is foolish. It's foolish. You're not going to see me buying stocks now when we're well under the 200-day moving average. It makes no sense. Guys, if stocks are going to go higher, we're going to need to bounce. We're going to have a pullback. We're going to have consolidation. We're going to need to break out over the 200-day moving average. And guess what, guys? It's still not time to get into swing season because we still need to back test the support, hold it, and then push higher. So you're not missing out on anything. I don't know where a lot of this talk on social media about, you feel like you have to buy things now or you have to be in these short positions now. Why are we doing this to ourselves? Why are you guys happy with losing money? Are you going to catch a winner? Of course. Are you going to lose? Of course. And you're probably going to lose more than you're going to win if you're just jumping in wherever. If you're jumping in here and you're jumping in there and you're going short here and going long here and you're going short there and no, this is the bottom. I'm buying the bounce here. And no, we're going down. Guys, you guys are spinning your wheels in the mud. Wait for confirmation. Wait. And like if you want to start buying stocks to go long, we need to get over the 200-day moving average. If you're not a day trader and you're like, someone who's a buy and hold guy, you're building a portfolio, why would you want to take a chance on buying stocks underneath supply? What about buying a stock underneath supply is appetizing to you? Because you want to catch 100, 200, 300 extra points like on the NASDAQ, if you're talking about stocks, like if we kind of look at let's just look at, one of the stocks that I like to play, pretty popular stock. Like let's look at NVIDIA and we look at NVIDIA's daily time frame. So NVIDIA is approaching the 200-day moving average. Okay. So why are we going to want to buy? Why are we going to want to buy NVIDIA at a test of the 200-day moving average? Because let's say, for example, we come down here and we start testing the 200-day moving average and you start buying stocks here and one news headline flushes us out. Now you're going to be asking people on social media, where's the bottom? Why did stocks go down? You bought because there's no reason to buy stock. There's no reason to be going long, especially in this environment. Now, there's also no reason to be going short here. because this can completely hold and the market could turn around. So until we get over macro levels of supply or break down macro levels of demand, we cannot guess market direction. Okay, we cannot guess market direction, but instead, if we get a bounce, you can play this for a day trade. If we get a flush, you can play this for a day trade. If we consolidate and hold, you can play this for a long. If we consolidate and reject, you can play this for a short. Why are we sitting here trying to guess what the market is going to do? So many stocks are underneath daily supply. They are underneath macro levels of support. If we take a look at the triple Qs as a whole are underneath the 200-day moving average. We're underneath the 20-day moving average. Why would we try to time the bottom? Why are you trying to get the perfect entry? You're not going to get the perfect entry. You're not going to call this bottom, think that you're going to buy here long because you're going to ride this whole wave up. Maybe you do, maybe you don't. But the point is that what I'm seeing a lot of is people are buying here, and let's say, for example, the market does this. Now your bottom that you were buying is no longer relevant. And now you're stuck holding a bag here, asking people on social media, what do I do? Stop doing that. Guys, this is not swing season. This stock, the market, the triple Qs, they can hold and bounce 100%. Okay. We can hold and flush 100%. So is your guess long or short going to be right? Are you on the right side of the market? Because right now we are at a crossroads between trying to stay afloat and drowning underwater. So, the main thing that I'm going to leave and end this video with, guys, is if you're trading mega cap, Microsoft, Facebook, Tesla, Amazon, Google, so forth and so forth, until the NASDAQ 100, until the triple Qs ETF gets over the 200-day moving average, it is not time to be buying stocks long. I'm not saying that it's time to short them either. But what I'm trying to say is that if you are agile and able to just day trade and catch a bounce long or catch a potential short, and then when we do finally set up macro levels, position yourself to actually get into a swing trade that's going to make sense versus trying to guess what the market is going to do in an environment where we are not doing anything. So since 2022, yes, we've had an extended move down, we've had a bounce, we've had consolidation, and it looks like maybe we come lower, but we can also hold and stay in this range, okay? Now this range can be extended 3 months, 6 months, 9 months, 12 months down the road, and all you're gonna consistently do is chop yourself up trying to buy breakouts here, trying to short breakdowns here, when realistically we just stay range bound for 6 months, 9 months, 12 months. The big thing is that you guys are so scared that you guys are going to miss the move. Stop being so scared, relax, take a break, look at the charts from a macro view. You're not missing anything. You're not going to miss the bottom. If this is the bottom, then you can buy stocks here or here or here or here or here or here because we're going to be trending higher. If this is the short-term top, right? Meaning that these all-time highs is the top, this is our short-term top, and we are going to flush. You don't need to start shorting and holding positions here. Why not take a position here? Why not take a position here? Why not take a position here? You're not going to miss out on the move. Guys, I hope this video helps. If you're looking to day trade, I'm not talking to investors. I'm not one to give advice realistically on anything because I am not a financial advisor. I'm just an options day trader, scalper. But if you guys are actually looking to learn how to day trade, you guys want to day trade, and you guys want to have that cash on hand so you can be able to participate in the markets up or down, and you're not looking to, what stock should I buy at these lows? What stock is going to break out? What stock is going to flush? You know, nobody can predict that. Nobody can. If anybody is sitting here telling you that, you know, this stocks are cheap and that you should be buying these dips, stop listening to those people. Please stop listening to those people. If anyone telling you that the market is crashing, guys, the market is not crashing, okay? The market is not crashing. If we take a look at the weekly time frame here, if we take a look at the weekly time frame, does this look like the market is crashing? Straight up COVID, straight up correction, straight up back test, straight up back test, straight up back test. All we're doing is back testing highs until we really start losing this zone. We can say that the market is crashing. Guys, this does not look like a market crash. Yes, I understand times are hard. I understand that it's not as easy as it was a year ago. I understand it's not as easy as it was in 2020. But guys, this is not market crashing. Everything is on fire. People are losing their jobs. You know, market is going to zero. That's not what this is. This is not. Now, if we start doing this over the next 12 months, this is a different situation. But does this look like this? This is a downward market. This is an upward market. Guys, we're still a long ways away from market crashing, guys. We're still a long ways away from the market crashing. Just be safe out there. Stop trying to guess. Stop trying to time the market. I hope this helps. I'm just trying to give some insight. I see too many newer traders on social media just throwing out so much nonsense. You know, stocks are cheap, buy the dip. You know, if we have a war, then stock market's going to crash. Maybe it does, maybe it doesn't. But we can't sit here and try to predict the market. That what good is that doing for the conversation? What good is that doing for the conversation? It's you throwing your opinion out to someone else who has their opinion, and all it does is do nothing. If you guys want to make money in the stock market, then trade the stock market accordingly, okay? Trade the stock market accordingly. Do not try to guess the bottom. Do not try to guess the top. Wait for confirmation. Wait for confirmation. Wait for confirmation. We still need to get over the 200-day moving average, guys. And on the weekly time frame, we would need to get over this 377 area, you know, for stocks to really want to get bullish. But I just find it funny that a lot of people are, you know, come into the new week, you know, are we going to open red or green? Or, oh my God, the futures are down. If you're a trader, what does it matter if the futures are down or up? If you are a real trader, if you are a trader, I'm not talking about an investor. I'm not talking about someone who has $200,000 and you guys got a portfolio of 10 to 12 stocks. Yes, I understand if you are managing that portfolio of 10 to 12 stocks, majority of stocks are going to be down. But don't just sit there and watch your stocks bleed out. Hedge, buy some shorts on the Qs, buy some shorts on the SPYs, take some diamonds, the Dow Jones. Short against your position, hedge against your position, guys. Don't just sit there and watch your stocks bleed out. If we're trading underneath the 200-day moving average on the SPY and on the triple Qs, hedge your position short while those long positions are bleeding out. Don't just sit there and watch your positions bleed out. Be proactive, guys. Be proactive. So many people are sitting there saying, well, I want the stock market to go back up. Well, what are you doing about the market now? What are you doing about your positions now? Are you making cash flow now? Because you should be making cash flow right now, guys. Right now is when you should be making cash flow on those long positions by hedging short. You know, it's really hard to, you know, to see so many people sit in positions holding them long when you're not doing nothing about it, instead of just looking for someone to tell you that, hey, don't worry, stocks are going to come higher. Maybe they do, maybe they don't. And if they don't, what are you going to do about it? What are you going to do about those long positions? But if you're a trader, a day trader, a scalper, it doesn't matter if the market opens down 500 points or up 500 points. You're going to be able to make money in any market, bear market, bull market, sideways market. We've been in a sideways market, you know, majority sell biased. of 2022, but there's been opportunities to make money on the long as well as the short side. So opening up red or green doesn't matter unless you're managing a portfolio, you know, where you have sitting in 10 to 12 stocks and, you know, you're holding stocks long. But even if that's the case, you should still be hedging your position by taking Qs or the S&P 500 short until we get back over macro supply. That's kind of the way you're going to manage your position. But if you are a trader and you are participating in the market on a day-to-day basis, where you're buying weekly call options, and you're buying call options or you're buying put options, and you're concerned about the market being down or the market being up, it doesn't matter if the market is up or down. You can make money on both sides of the market, guys. I hope that helps. Subscribe to my Discord. That link is down in the description box below. Also, give me a like, thumbs up on this video, and leave me a comment. Let me know what you guys think. I want to know, are you one of those people that is concerned about if the market is going to open up red or green tomorrow? The only people that are concerned about that should be long-term investors. And if you are a long-term investor, then what are you going to do about the slow bleeding? Are you hedging your position? You need to be hedging your position. I want to know right now, if you guys are holding a long-term portfolio, are you hedging short against the indexes? And if you're not, I would like to know why. I would like to know why you're not hedging your positions short. Why are we not being proactive? If you are a day trader or a scalper, I would like to know why it is a concern if we open down 500 points or we open up 500 points. Does that change anything? Does it change anything? I'd like to know that in the comments below. And until next time, guys, I'm going to see you guys all in the next trading video.